Welcome back everyone, my name is Dee and this is Market Stalkers. If you're new here, I'm a professional futures trader and it's my goal to make order flow trading methods more accessible to everyone. There's a very good reason why us professionals who have been able to maintain consistency over many years stick with order flow. And that's because this style of trading moves you away from trying to be psychic Sally, predicting the market, and drags you back to objectivity and trading the auction process. So I'm here to help you overcome some common and not so common trader issues so that maybe you can become a pro yourself or just become someone who's quite good at trading. If that sounds like something you're interested in, please consider subscribing. But right now it is Monday, so I'm here with a weekly strategy video. Looking at the releases scheduled for this week, there's a rate decision from New Zealand and also FOMC minutes on Wednesday, but that's not the FOMC, it's not the rate decision, so it probably won't have much impact. Most of the time what happens then is they just repeat a very similar statement from the previous rate decision, and for that, look out for any wording that may have been added or taken away. I've also noticed that there is a Jerome Powell speech scheduled for Tuesday, so that might bring, a bit of bounciness. But again, it depends whether he is actually speaking about the monetary policies or just, wishing his cousin a happy birthday. So not all speeches by the Fed chairman will be relevant. As always, exercise caution whenever these sort of events are scheduled. Let's have a look at commodities this week. Specifically crude oil and gold, because these two are still moving fairly well, even though it's like summer months, summer trading. I'm not going to do S&P this time around because I've noticed some dry up in liquidity. The ranges have diminished quite a bit. Usually S&P tends to trade around 30 to 40 handles in a session. Well, now that's actually come down to 18 handles, and that makes it quite tough to get any sort of easier momentum moves for day trading specifically. For day trading, you really need that liquidity to get decent setups that have enough legs to bring you a good risk-reward ratio on your trades. Anything else, and it becomes a struggle. Let's start with gold first. I'm going to use a spot chart here because it's just easier to see what's going on. When you look at the monthly chart of gold, it just looks like it's gone into a bit of a sideways movement. Again, it's not unusual. It's just whipping up and down. It is the summer months, so although gold doesn't traditionally suffer from very much dry up in liquidity, it will have these like spikier moves, and it will typically have a lot of fake outs and moves that don't really go anywhere, and that's exactly what we're seeing here. On the weekly chart, there was a pretty nice retracement from a gap down that happened last week, and now the price is coming into an area of supply. This is the first supply that we're coming up against. If you're referencing futures, there will be a bit of a price difference between the futures and the spot chart, but they should look fairly similar. So what I expect, I would like to see what happens at this 1800 area. If there's a short reaction, if I notice some sellers coming in, I would become a seller as well. Purely because on the monthly chart, it's kind of going into a drop, base drop formation. So you can see the drop, now we're in a base. So I'm speculating that at some point, it might go into another drop. Whether that's going to be this month, next month, November, December, it remains to be seen because this is a very large time frame. And then on this weekly chart, that's the first supply. Second supply is higher up. It's all the way up here, but it's weak. So if the price gets all the way there, I would be a little bit careful with this area because it has been tested many times and it is an offspring area, so it's not exactly fresh. On the daily chart, there is a localized Q point on the daily chart, so coming into Q high, kind of lining up with that weekly conterminous supply line, the first one. So yeah, that kind of increases my bias to the downside. But again, I first want to see what happens when we actually get there. On the day time frame, this is a 30-minute chart. The prices have opened inside value, and there is still quite a bit of space before we exhaust the statistical range on the day. And because the price has rejected the value area and extended that initial balance. To me, for today at the very least, it means that I might want to get involved into a long if they don't, bring it back into initial balance. So that's all I'm looking for until the price tests somewhere close to this round number, supplies, etc., daily Q point, and all of that good stuff. Nothing more to say. Moving on to crude oil. Crude oil monthly chart. For now, they're still trying to sell, but again, month is not over yet, so I cannot read into this too much. On the weekly chart, there was a doji last week, and now it's sort of looking like a drop-based drop formation. But I don't like this doji here because A is just one candle, and B, it's quite far away from the initial drop. So this is where you have to distinguish between your supply and demand formations. So this is not necessarily a drop-based drop. If it was a true drop-based drop, the base should be somewhere higher up, and that's not happened. So this is just like a speed bump. Therefore, if the price turns around and starts going the other way, I wouldn't necessarily look at this area as some kind of a stopping point where I would expect a reversal on a large time frame. On the daily chart, there's a localized Q low, but again, last week I noted that they tested quite deep into it and then went all the way down to the originating demand. And now we're kind of heading down towards it again. So in the sort of grand scheme of things, I don't expect this to hold, so I would expect to see a move through it. And that's why when the day comes, I would like to position myself for the break downwards, but that means not trading straight into this area as a short. So if it gets to 65.37, 65.50, I already want to be short. I don't want to start my short there, because you can have a situation where you're correct on the direction, but then this sort of thing happens. You have, a large buying wick or something. So you want to avoid that. So if you want to trade with the direction of the break, you need to position yourself somewhere higher. And with that in mind, I'm going to have a look at where the profile is doing. For now, Nymex initial balance is normal. The prices are opening quite far away from Friday's trading, which can give scope for a mean reversion upside. I think it's kind of similar to what Monday did last week. But last week they had a little bit of a pop to the downside, failed auction, and then it sort of ended up as a neutral day. So it's not beyond the realm of possibility that the same thing will happen. If you end up with a neutral day, that's always more difficult because that means some kind of responsive activity and lack of activity, lack of interest. But it's, again, similar to last week. If the price manages to extend cleanly to the upside, I may get involved in that. I might even get involved in some kind of a failed auction long to then kind of trade back towards my areas of interest. And some of those might be located on a 4-hour chart. So yeah, there is a little bit of continuous line that is being created right now. So if I do manage to get involved, then looking at this 67.20 area could be a good area for any kind of targets. And for now, that is all well within the average session range, which is somewhere up here. So yeah, I would like to position myself long. However, it depends whether they make a move in the first 2 hours or not. With order flow, you will always have that time-based component of when do you expect something to happen. So if that kind of event doesn't happen in the first couple of hours or it happens later in the day, it usually diminishes the probability of the event happening to the full extent at all. So if they cannot close the gap, that means they will likely go lower. But if that does happen, this outlook today, with the way the sentiment is at the open, it's not the best choice for the price just kind of shooting through without looking back. There's probably going to be a lot of ups and downs, and then they'll basically make up their minds on direction. And anytime you talk about order flow trading methods of any kind, one thing that people neglect is time. In which time period do you expect a certain event to happen? Because it's not always throughout the entire day. This is why I don't trade for 12 hours a day. I basically trade anywhere between 2 and 4 hours a day, and then I'm done. I also want to see these events happen within a very tight sort of window of trading setups if I'm going to get involved at all. If that doesn't happen, I leave them alone. So that's your weekly strategy. Done and dusted. Happy trading, and I'll see you guys next time.